Welcome back to the deep dive. So today we're diving into something a lot of you have been asking about Bitcoin. It's been all over the news lately, with everyone talking about the economy and what it means for Bitcoin's price. And, well, you want to know what's really going on, right? So we found this really interesting article that we thought we'd unpack together. It talks about something called easy money season. And get this, it suggests this could be a major factor driving Bitcoin's future. Okay, so easy money season. What is that? And what on earth does that have to do with Bitcoin?
Well, imagine it this way. Sometimes central banks, like say the US Federal Reserve, they want to give the economy a little boost, encourage people to spend more.
Hmm.
And one of their favorite ways to do that is by lowering interest rates. It's kind of like, I don't know, putting a free drinks sign up at a party, right?
Yeah.
Makes it cheaper to borrow money.
So businesses and investors have more cash on hand.
Exactly. And when they have that extra cash, they're more likely to take risks, try things that might yield big returns, even if those things are a little more, shall we say, unpredictable.
And that's where Bitcoin comes in.
You got it. Bitcoin, with its potential for huge growth, it becomes very tempting during these easy money seasons.
Mhm.
Now, here's the kicker. It's not just the US that's contributing to this right now. China. Yeah, they're doing their own thing, pumping money into their system through economic stimulus, different reasons maybe, but the end result, the same. A global surge in available cash.
And all that cash has to go somewhere.
Yeah.
So how does this actually play out in the real world? Like what happens to Bitcoin's price when we see this easy money flowing?
Well, cast your mind back to the COVID-19 pandemic for a moment.
Oh,
Governments worldwide slashing interest rates, dishing out massive stimulus packages. Remember what happened to Bitcoin then?
it went kind of crazy, didn't it?
It went on an absolute tear. Prices skyrocketed as investors piled in, looking for anything with high growth potential. And you know what? A lot of analysts think we're seeing a similar pattern play out right now. But there's another layer to this, something that makes it even more intriguing.
I am listening.
So, unlike your dollars or euros, those currencies governments can just print more of whenever they feel like it. Bitcoin, it's different.
Right. Limited supply, only 21 million Bitcoins ever.
Precisely. And that scarcity, my friend, is key. You combine a sudden surge in investors, all flush with easy money and eager to make a buck, with a fixed, limited supply of something. Well, you can probably guess what happens to the price.
And it's not just, regular people like us who are paying attention to this. We're talking like big-time financial institutions.
Yeah.
I mean, BlackRock, right.
Yeah.
They're getting in on the Bitcoin action too.
Yeah, and that's a really big deal because it tells us something's changing. Like the traditional financial world, the one that used to look down its nose at Bitcoin, they're starting to take it seriously.
Okay, so unpack that a little bit for us.
Yeah.
What are these big players actually doing? And why should we care?
So basically, they're finding ways to offer Bitcoin to their clients, right? Like the super wealthy, the giant pension funds, those folks. Because guess what? Those clients, they want Bitcoin too.
Makes sense.
So one of the main tools they're using is something called an ETF, stands for Exchange Traded Fund. Think of it like a big basket of assets. And in this case, that basket is full of Bitcoin. And the thing about ETFs is they're traded on stock exchanges, just like, regular stocks. Makes it a lot easier for these giant institutions. We're talking like billions of dollars they manage. It's easier for them to get involved in Bitcoin without having to actually buy it directly and figure out how to store it and all that.
So it's like they're building a smoother on-ramp for all that Wall Street money to flow into Bitcoin.
You got it. And these guys, let me tell you, they don't usually mess around with small potatoes like BlackRock. They just pumped a cool $184 million into Bitcoin ETFs. Not messing around, right? That's a serious bet, and it's sending a message Bitcoin is going mainstream.
So everyone wants to get in on the action now. But okay, let's play devil's advocate here for a sec. This easy money season we're in, it's got to end eventually, doesn't it? What happens then when the music stops and the punch bowl gets taken away, so to speak?
$1 million question, right? Or, well, maybe $500,000 if those Bitcoin price predictions pan out the way some people think. But look, you're right. Bitcoin's value, at least for now, it's pretty closely tied to what's going on in the bigger economy. When there's lots of cash sloshing around, like now, Bitcoin, it tends to do well. But when central banks start hitting the brakes, like, say, raising interest rates to fight inflation, investors might get spooked and pull back from the riskier stuff, cryptocurrencies included.
So are we talking about a potential Bitcoin crash when this easy money dries up?
It's definitely a possibility, no doubt about it. Something anyone thinking about investing in Bitcoin needs to understand. But there's another piece to the puzzle here, something that might balance things out a bit. And that's the Bitcoin community itself.
Right, those die-hard Bitcoin believers.
Exactly. We're talking millions of people worldwide who are convinced that Bitcoin is the future of finance. And they're not just in it for the quick buck either. A lot of them, they're driven by this whole philosophy, the idea of a decentralized financial system, one that's free from the control of, big banks and governments.
Yeah, it's kind of like a digital rebellion against the old way of doing things, isn't it?
You got it. And this community, let me tell you, they are resilient. We've seen Bitcoin's price take some pretty big hits in the past, and they just keep coming back. So what we have here are these two powerful forces, right? On one hand, you've got the institutional investors, the BlackRocks of the world. They're all about profits, diversifying their portfolios. And on the other hand, you have this passionate community of individual investors driven by, I don't know, a kind of belief in Bitcoin's revolutionary potential.
So it's like a tug of war. Wall Street versus the Wild West of the internet, and it's all playing out in this digital arena.
And it's anyone's guess who's going to win in the end, or how it's all going to affect Bitcoin's price down the road.
But either way, it's definitely one heck of a show to watch.
It really is. We're talking about a major turning point in financial history, right? This clash between old school finance and this new decentralized world. And it's not just about Bitcoin either. It reflects these bigger shifts happening in the global economy, technology, changing everything, challenging the powers that be.
Yeah, creating tons of opportunity, but also a whole lot of uncertainty.
Absolutely. It's like we're all watching a financial thriller unfold right in front of us, and we have no idea how it's going to end. But one thing's for sure, it's going to be one heck of a ride.
Yeah, no doubt about it. It's a wild time to be paying attention to all of this. And, speaking of wild, something you said earlier got me thinking. You used the word hedge, and I feel like that gets thrown around a lot in these conversations. But for the average person out there, what does that actually mean? Like plain English? And does it even apply to Bitcoin?
Right. Because Bitcoin's supposed to be this like safe haven, but then its price bounces all over the place.
Yeah, it's a good question. So a hedge, it's like, think of it as a way to protect yourself, financially speaking. Like a life jacket, but for your money.
Okay.
When someone says something's a hedge against inflation, they mean its value tends to stay strong or even go up when everything else is getting more expensive.
So like if my morning coffee costs $5 today, but inflation pushes it to $10 next year, a good hedge would be something that also increased in value, so I'm not like losing buying power.
Exactly. And there are people who believe Bitcoin could be that kind of hedge, precisely because its supply is limited.
Right. Only 21 million Bitcoins ever. Can't just print more. Exactly. Which is different from, traditional currencies where central banks can just like create more whenever they want, which by the way can lead to inflation. But Bitcoin, its supply is capped. It's all based on math. You can't mess with it. So at least in theory, its value shouldn't be as affected by those same forces.
Okay, so that's a point in Bitcoin's favor, for sure. But then there's that whole volatility thing, like its price goes up and down more than a roller coaster.
Yeah, that's the big question, isn't it? Like, how can something be a safe haven, a hedge, if its price is all over the map?
Right.
And honestly, as a short-term hedge, Bitcoin is risky, no way around it. Like, if you need something to protect your money because, I don't know, some big financial crisis just hit, Bitcoin's wild price swings probably aren't going to make you feel very secure.
It's like trying to, I don't know, ride out a hurricane in a tiny little boat.
Right, exactly. But long term, if Bitcoin does what its supporters think it will, if more people use it, if its price stabilizes over time, then yeah, it could be a decent hedge against inflation and all those other economic uncertainties.
So we just have to wait and see, I guess.
Pretty much, yeah.
Okay, so before we wrap things up here, let's bring it all home for our listeners. If they've been following along, maybe even taking notes, what are the big takeaways from today's deep dive?
I think the biggest one is just realizing that things are changing and fast. The entire global economy is in this weird transitional phase. We've got easy money fueling things right now, pushing asset prices up, but that can't last forever.
Right. Party's got to end sometime.
Exactly. And when it comes to something as new as, let's face it, as weird as Bitcoin, got to be careful.
Don't bet the farm, basically.
Yeah, basically. Do your research, understand the risks, there are plenty, and never, ever invest more than you can afford to lose.
Words to live by. Well, on that note, I think we've done about all the Bitcoin deep diving we can handle for one day.
Yeah.
It's been quite a journey, hasn't it? Global economics, institutional investors, the wild west of crypto communities.
It's a fascinating world out there.
It really is. So to everyone listening, thanks for coming along for the ride. Keep exploring, keep learning, and we'll catch you on the next deep dive.